You're listening to the Non-Del Influencers Podcast, brought to you by First Funding. Join host Matt Coles as he delivers powerful conversations to help non-delegated lenders succeed and scale in today's market.
Hello, everybody. Welcome back to the Non-Del Influencers Podcast. Today, I'm joined by Eric Lenarz, EVP of Correspondent Lending with Champions Funding. How are you doing, Eric?
Good. Thanks for having me, Matt.
So, Eric, you're launching the delegated channel over at Champions. Tell me what that looks like. Launching a new channel. Give me an idea of what it looks like to bring it all together.
Sure.
And what some of the initial goals were that you had as you started to lay this out.
Yeah. So here at Champions, we are starting up, or I actually have. We've been live now for about 60 days on the correspondent side, and it's full circle. So both non-delegated and delegated channels. We even allow clients that want to have delegated to actually toggle back and forth, if you will, as well as holding a wholesale relationship with us. So really kind of offering the full gamut. There's a lot that goes into it up front, that it's not just, hey, let's sign an agreement, let's start buying some loans. There's a lot of moving parts to make it all go smoothly and seamlessly for our correspondent clients, anywhere from getting doc set up with doc prep providers to make it easier for any kind of specialized documents which come into play, like in the business purpose area, making sure we're approved with their warehouse investor or warehouse lines like yourself, thank you, Matt and team, for doing that, making sure that we're approved and vetted up for them so they can fund loans and deliver to us as well. Contracts, guidelines, systems, portals, all that kind of stuff. Not necessarily the fun part of the business, but necessary stuff to make it go as smoothly as possible for everyone.
I know in my experience, when I've started a new project or I've planned for something, I finish my document and I go, there's absolutely no holes in my plan, right?
Right, yeah.
What was the, oh man, I can't believe I missed that moment. Did you have one of those in the last 60 days?
I don't know if there was a major epiphanies or major, like, oh my gosh, I can't believe we missed that. But
yeah,
to your point, Matt, I mean, we tested until we're blue in the face, which almost sometimes you test so much and you forget some of the obvious things. Like, I guess one of them was just kind of how our delegate clients upload a file to our portal differently than a non-delegate, because it goes through different steps, obviously, where delegated, we're just jumping to, hey, close loan done, deliver it to us. We don't have any of those underwriting steps in there as well. So I guess maybe that was one that I could have swore we tested it through and then all of a sudden we got live. We're like, well, shoot, how does a delegate client upload a file?
Yeah, I'm sure you did test it, and then it was one of those things like check the box. Yeah, we tested it, but when you go live with it, there's always going to be some feedback. So your journey to Champions professionally, take me through. You got quite a reputation in the industry. You've always been a great leader in our industry. Tell me a little bit about your journey to Champions over the last few years.
Yeah, over the last few years. Well, the story of me ending up at Champions actually goes back to probably around 2007, 2008, which, many people are probably, getting nervous twitches about a rough patch for our market, obviously, during that time when the financial crisis hit. And that's when I started up in the correspondent sales over at Wells Fargo back then. And one of my clients at that point was a little company called Pacific Union Financial at that time, which was owned and operated by Evan Stone. Small shop at that point, but obviously they grew into something very large and eventually sold to Mr. Cooper. Evan and I were pretty close all through that time, who's now, after his non-compete was up with Mr. Cooper, started up the Champions Funding, and he wanted to get into correspondent after starting up in wholesale. And, as he put it, and I thought it was a great way, it was fun to put on the same jersey for the first time after all these years working together as kind of client investor type of relationship, where now we're working together, and came over here to start up his correspondent channel. And I guess the rest is history.
So really interesting point. And I want to dive into this a little bit. So you've had some tremendous correspondent experience since 2007, 2008, maybe even before. Now, you and I kind of cross paths, right? Because what we're doing here today is talking about the non-delegated partner. What are you looking for at Champions with your non-delegated partners? Move beyond the financials. How are you identifying the prime opportunity to bring them into the fold with Champions?
Yeah, so Champions had a goal from the start of, one, we're a CDFI, so we do some of that stuff as well. Focused on diverse segments and underserved parts of the community and stuff like that. That's really some of that stuff is exclusive to the wholesale side, but also non-QM. Just wanted to bring a new flavor to non-QM, which has been around for quite a while now. It's been around over a decade for it, and has a little bit of fits and stops in there and stuff like that. But it's been kind of a confusing, muddy space overall. Everyone kind of does it a little bit different. Some maybe it's a clunkier than others, and some might have their niches that work well and some that don't. But the overall goal is just to bring a new flavor, to try to make this space predictable and consistent and, dare say, easier to do lending in, where it doesn't take a labor of love for every loan to get through. So that was attractive to me. A previous company I was at as well, I started up their correspondent channel. We did non-QM as well. I think we did it fairly well too, but Champions here was kind of a fresh start and just a different idea of, let's really bring a customer service focus to this non-QM space. Let's be very clear in what we do. Let's try to make our guidelines clearer so everyone can enjoy a more efficient process with it. So that was exciting to me. And to me, it's always important to be there along the journey for clients as well. So I didn't want to go somewhere that only does non-delegated or only does delegated, but offers the full gamut of it, because people kind of toggle back and forth sometimes. They're really
absolutely.
Yeah.
We see that quite a bit. We see that quite a bit of, you move into the non-delegated space, and even the idea of the same shop. You know what? Maybe I want to do this product non-del. I feel much more comfortable with this product. One of the things that you said when we first talked last week, what's your tagline again about property? What you said something about? Yeah, the space of non-QM.
Yeah, I fully agree with that the non-QM space, someone told me a few years back, and I'm like, that really makes sense, and it really does apply. Non-QM is for unique borrowers, but not unique properties. Not to say we can't, because we do some things with condotels and stuff like that too, but even that, it comes down to, is it a marketable, solid collateral that we're lending upon? If so, let's try to find some solution for borrowers that otherwise get left out of the cold in the traditional conforming government and maybe traditional, bank jumbo portfolio products. Let's have a solution for that borrower, but we can't get too unique on the property, because that's, we may be taking a little more risk on the borrower situation, but not so much on the collateral piece of it. So that always resonates well with me. And I think that holds true across the board. Everyone in this space is, hey, do we have a really good appraisal? Is the property well supported and everything like that? If so, then yes, then we've created some avenues that borrowers can get into those homes that maybe can't in the traditional sense.
It's such a great saying, because in my past, every lender I've always worked for too, is the exact same refrain. And I think sometimes what ends up happening is people think that non-QM is kind of the dumping ground for wherever it doesn't work, right? Let's just do it non-QM. And so you see a lot of that with insurance and unique properties and, terrible credit. And one of the things that I really love about the opportunity for non-delegated lenders and delegated lenders alike is the rebranding of the word non-QM.
Right.
And I think that our industry did a disservice from the very beginning by calling this non-QM, right? And I always say nobody wants to be non, right? No one wants to be a borrower that doesn't fit into the box. And I just think that the branding opportunity, you and I in the industry, we know what non-QM means and what it could be.
Right.
But if you're out on the streets talking to a realtor or to a borrower or to any of your referral sources, and you say the word non-QM, well, why am I non? What am I? What's non about me? I have plenty of money and I have plenty of assets. I have a beautiful house, whatever it could be. So when we talk about the branding side of it, do you ever coach your potential lenders about, hey, let's position this product this way? And do you ever see that come to fruition in their branding and or their messaging that they're putting out there?
Yes and no. A lot of people agree on the point, and I 100% do as well. And I know our president, we've had conversation like, why are we still calling this the non-QM space? Because especially when the final rules were made on QM, most of these loans are QM. Now, the business purpose stuff a little bit differently, especially with the prepayment penalties, or if you have an interest only, some of those aspects of it. But straight up bank statement qualifying loan, technically speaking, that would fall under QM now. But no one's rebranded it because people try to rebrand in this space, but no, it's almost become counterintuitive where you have maybe a cool name for a product, but everyone's like, well, what is that? Well, that's just our DSCR program. Like, what's this? Oh, that's just our foreign national program, type of deal. So we're kind of stuck with that branding, I think, at this point. I don't know how we do it. I'll have to probably circle back with our marketing folks to figure out how we can break that stigma comes out. Because you're right. There's plenty of people that are like, oh, we don't do any of that. We don't do any of that. I'm like, but why not?
And then it leads to the non-Del customer or the non-Del lender where they, in my space, I'll talk to a lot of non-Del lenders, and I don't want to do non-QM on my warehouse facility because of the risk. And I go, well, you're doing less than 600 credit score government loans on your warehouse facility, but you don't want to do a 740, 60% loan to value with a highly qualified borrower on your warehouse. So what's the idea behind that? And how do you think that we should tackle that as we move forward in a relationship together?
Yeah, I think it's just telling the story of this space, because COVID gave everyone kind of a little bit of a shock there too, because, the whole world stopped literally, for, stuff like that. In the non-QM space, or specifically a securitization space around that, was like, oh, we don't know what to do. But I don't think it's fair to look at this space in the scope of COVID when the whole world shut down. You couldn't go to the Target, to get toilet paper. It was a weird time, but that aside from it, I think we got to tell a story how strong the liquidity is in this space, how much the market does want this, whether it be for the securitization space or the other folks that want to put this on their balance sheet. It's a very high quality, strong performing, good yield mix right now in the market space. And that's why the non-QM space continues to grow. And you're right, Matt. I have that conversation quite often, like, oh, we only want to broker that, we don't want to bank it. But in the same breath, there are a lot of times like, well, we don't make any money if we let them broker out, and we lose control of the transaction and the borrower experience and things that make us a lending company. It's kind of like, well, why aren't you doing it then? What's holding you back of all those things of being that direct lender, what you've built your company around, which you can do so both in the non-delegated and delegated. Have your investor, take on the credit risk part of it for you and underwrite it for you and provide that service, but you still are that face in the company to the client or the borrower. So we have those conversations commonly, but at the same time, we don't want to push people into something they're not comfortable with.
Yeah, absolutely.
We're continually trying to educate them on it. Like, hey, this space is it's not Alt-A either. A lot of people want to, combine it with Alt-A. Like these are documented loans. We just have a different way of qualifying.
Well, listen, I cut my teeth when I was a kid in the industry at Greenpoint Mortgage. So I know what a 58-page rate sheet with no income, no assets looks like. So I understand that. But one of the things, and you have a great perspective of it. I hope you can share it. We've been talking non-QM in our business for years. Mm-hmm. What is the appetite where it sits today? What's available? What's the market share that you think it can grow to? What's the overall industry appetite to take more of this business in?
Yeah, I don't know the stat offhand, Matt. I probably should know that as far as what it is. I can't imagine it's more than probably still 10%, 15%, maybe of the overall market share, but that's probably grown 2-3-fold over the last few years as well. Part of it is because we'll just call it the prime or conforming governance space that shrunk so much with the challenge of the interest rate. But at the same time, more and more people are adopting into this space, which has been heavily done by brokers. For most of the timeline of the non-QM, it's been dominated by the wholesale space or brokered space for some of the reasons we already discussed. But more and more are like, hi, we know how to do this as well on the banking side. So some more retail originations and overall in the mortgage banking for IMBs, it's grown quite a bit. So I can't, it's all predicated on what the market probably throws at us. If we get some unexpected rate rally, everyone's going to gravitate to the lower hanging fruit and stuff like that. And I think it'll, ebb back to a smaller share, but it's continuing to grow. I don't know the stats of it. Maybe you do, Matt, but I know it's grown. And when we talk with our clients, where a few years ago, they're like, oh, we only do maybe $1 million a month. Now it's, 5-10%, sometimes 25, 30, 40% of their shop in a lot of these IMB shops. So it's
I think one of the market is continuing to grow, and I think there's a lot of great opportunity out there. And you're right, LOs in general, right? If rates go down, they'll focus on their bread and butter type of, we'll call it their bread and butter. But there's always going to be a place for the non-QM lender. But I also want to talk about, and one of the things I want to make sure that you address is this idea that, and my philosophy, my background, I always felt like a loan originator would always kind of try to fit non-QM into a box. Oh, it worked over here at this lender. It should work at every other non-QM lender out there. And I think that's one of the challenges that we have in the industry is like, okay, well, you got to be very specific about what you're doing. Eyes wide open as you're launching this channel for champions. What are you trying to do to make sure that you're homogenizing the experience for your broker partners or your lender partners to make sure that they understand what all the nuances are that you have to offer?
Yeah, and I think that's where our beauty comes out, is within the guidelines, and really understanding we want to call them niches, guideline variants, whatever you want to call them, but that's what we've spent a lot of time as a company to differentiate ourselves. Like, so we're constantly trying to get in there in front of folks. Let's do some LO trainings. Let's do some underwriter trainings. Do some processor training. Let's go through. Let's put some different materials. Let's put some tools together. So there's a lot of very specific things that we can call niches that don't just look good on paper, but actually help you get the loans done more effectively. That's where our whole goal was. It wasn't to you have something flashy show up on the matrix that, oh, you can do that, because we've all seen that, where it's like, yeah, it shows up on matrix, but you can never get those loans done. Doesn't do us any good. Let's put something on the matrix that we can actually get done, and maybe get done more effectively for everyone. So, for example, we're one of the few out there that are doing DSCR where, if it's not coming in at one, which it's very hard to do sometimes with the cost of insurances going up, just cost of homes, cost of everything going up, right. Where you can supplement that with some asset depletion to get it over one and open up the doors to get that loan done a little bit more effectively and offer a better deal to the borrower on it as well. And things on the bank statements, we call it streamlined bank statements. So instead of, if as long as we don't see some large variances recently, we can qualify just off the totals. But it's different. So you have to coach and talk through it with everyone, because you can't find it just by going out to your pricing engine. It's going to tell you everything. You gotta study it up a little bit, and we gotta stay in front of them and share our story and share why our programs are going to help them grow their business.
Yeah, really important, right? I mean, you can't stick you just said it, you can't stick a non-QM into a pricing engine and say, show me the best price, right? I mean, ultimately you have to trust and value the partners that you have on that side of it. And Champions has always been a great partner on that side of it. So let's fast forward, 6 months from now, 9 months from now, end of year 2025. I can't believe we're already at the end of the first quarter of 2025. What does it look like on your sales team, with your growth and your production? I mean, just what are you hoping for in the year ahead?
Yeah, I do anticipate we will be growing the overall team and everything. Like we touched on at the beginning, we have been launched for about 60 days or so now. Iron out some of those kinks that didn't get caught in the testing and stuff like that. But now we feel really good about it and starting to scale it and seeing every day our pipeline grow, our client base grow, and people, doing a few loans like, wow, this is really a game changer. You weren't just kidding. As far as those niches you have and everything like that. So the first year is always exciting, challenging, all that kind of good stuff as well, as your growth goes up and not 10-20% usually. Sometimes you see 200, 300, 400% month over month growth and everything. So one thing that we focused on and we'll continue to focus on is staying in front of that the best you humanly possibly can on that, where let's be proactive, because good thing with Correspondent, we can kind of see the wave coming a little bit more. for it. It doesn't happen like a snap of the finger. You have usually a good 30 or so day in front of it, but we're trying to stay even, another 30 days in front of that as well. So our clients, as we grow, they don't feel any, hitch at all in the service levels, and always stay in front of that as best we can. Now, if market takes off, more than all of us expect, I think we'll all have to, adapt and pull back pricing. Different things you got to do to kind of keep, your capacity in line with volume levels. But no, we're excited about it. The company is very committed to growing the correspondent channel. And as Evan, our CEO, and I talk about regularly, is service is what we're selling. Like we want to be that beacon of getting the loans done consistently, always for all of our wholesale brokers and our correspondent clients out there. So we're excited for the growth, but it'll present its own different challenges as well.
So talk to me a little bit about the emerging banker world. What does it look like for you? Are you guys going to be targeting that specific customer? What does a non-Del profile look like to you guys?
Yeah, so right now we're offering, that's a good question, man, because in the non-Del space, it's a wide variety of how folks approach it. Right now, we're not doing what we would maybe call the emerging banker or mini core experience yet. Now we want to get that out, but we started with maybe the less labor intensive portion of it, where we provide the underwriting services. And review the entities, things of that nature for you. So, but all the disclosures and docs are still done by our lender partners or clients for it. But we are looking to expand into probably second half of the year here, or maybe even sooner, the emerging banker, or one folks on our site called Banker in a Box, or basically where we take it on. It's almost like a hybrid wholesale experience, but it's still always done in your name, the correspondent lender, or your warehouse line, but we facilitate, help with disclosures, docs, final docs, getting everything actually up to that closing table, and they push the button to fund it. So we're not there quite yet. We're offering the other version of it, the non-delegated, where we take on the underrated aspect, but the correspondent lender would be responsible for all disclosures and docs on it. But that is in the horizon, that is in the plans. We just wanted to start with the more simple and straightforward version.
Yeah, no, I think it's a great plan, and I think that I've been in this seat for about a year and a half now, and there's an appetite for it on the non-Del side, absolutely, and I'm a big fan of the space in general, because I do like the idea. I really do believe in the branding aspect of it. In the non-Del space, people come into this space for the reasons that we always talk about, right? Flexibility, the ability to serve the client, and then more specifically, a lot of branding. And so what you're starting to see is a lot of, 2020 to 2023 or 24, we actually saw a lot of the retail people come into our world, right? Uh-huh. And they had these massive marketing companies behind, or massive marketing departments behind them, and they were able to brand themselves. Now they're breaking out, they're trying to do their own thing, but they really believe in the power of branding, and I do as well. And I just, a company like Champions coming into the space, allowing non-delegated underwriting, I think is a huge win for the industry. So Eric, I just want to thank you very much for the opportunity to spend some time here. Thank you for joining the Non-Del Influencer podcast. Really appreciate your time, and we look forward to seeing everyone on the next one.
Thank you for the invite. I enjoyed my time.
All right. Thanks, Eric.
Thanks for tuning into the Non-Del Influencers podcast, powered by First Funding. For more resources and episodes, visit nondelinfluencers.com.